I'm sure by now that everyone has heard 4 of the largest brokerage are now going to zero commission trades. Is this a good thing for investors? So, a hot topic all over the news, all over YouTube, and anywhere that there's talk about the stock market and investing is 4 of the largest brokerage have now announced that they will be doing zero commissions online trades, mainly for stocks and ETFs, and some even for option trades. On October 1st, Charles Schwab was the first to announce zero commission trading, like I said, for both stocks, ETFs, and options trades. Right after that, 24 hours later, both E-Trade and TD Ameritrade announced the same deal as what Charles Schwab announced on October 1st. Shortly after that, a week later, now we have Fidelity. They have also threw their hat in the ring for zero fee commissions. So now we have 4 of the largest brokerage offering online zero fee commission trades. And the question is this a good thing for investors? Well, I read an article online, and I will leave a link in the description below, where an editor, he does not believe that this is a good idea for investors. And after reading the article, I wanted to share some of the points with you that I found interesting in this article. The first point that this editor made was that there are a lot of traders that once they enter into a commission-free trading platform, they become excessive traders. They pick up the bad habit of trading in and out of positions in efforts to beat the market. There is a saying that we can't time the market, but it's better to have time in the market. So for those that are not used to the zero commissions fee trading, they think that these particular investors tend to trade more, or those that have always been on the zero commissions platforms trade more than investors that were accustomed to paying fees in order to make trades. And they feel that having a zero commission trading platform creates bad habits for investors. Me personally, I've never paid a fee to trade, and I've only been a zero fee trader since I started investing. So I don't see that it makes a difference, because I do believe in the buy and hold strategy. However, sometimes you have to get out of a position for many reasons, and the fact that you can buy as many stocks as you want or trade as many times as you want with no commissions is a good thing, in my opinion. There are other facts that this editor uses to back up why he does not think that zero fee trade commissions is a good thing for investors. One is that TD Ameritrade, as an example, charges $49.99 for you to buy or sell no-load mutual funds. And he believes that the more that people have the option to trade with zero trade commissions, then they will, instead of putting their money in mutual funds, they are more likely to put their money in ETFs, which have lower expense ratios and, as I said, have no fees to trade. So rather than paying a fee to own a mutual fund and paying higher expense ratios, they would just prefer to buy an ETF instead and get the same result with less fees paid. Another example is that this could also just lead to people using less of the actively managed mutual funds in general because of these different fees and the fees that they no longer have to pay in order to trade stocks and ETFs and also options. Now, speaking about options, these brokerage do have to make money some type of way. So if they're not making money through trades on stocks and ETFs and options, then where are they making their money? Well, some think that for those who are doing option trades, when you do things such as a bid and ask spread, it could widen what the brokerage seeks to make money on those type of revenues. So what I mean by that is if you're doing a bid and ask spread, the spread could be widened because that's how that brokerage has to make money. So they're going to increase the spread in order to make up their loss in the trades in that portion of their investment platform. So through bids and asks, you could have a larger spread in order for those brokerage to make additional money to make up for the zero fee commission trades. Also, there could be other hidden costs or hidden charges on investments to increase the profits that those brokerage are making in order to make up for having zero fee commissions. And then also companies like Fidelity, they plan to automatically sweep investors' idle cash into government money market funds instead of the usual money market accounts that they usually leave your money in, which is going to allow them to make the interest on your money by sweeping your money into these government money market funds. So any idle cash that you have, they're going to use that idle cash in order to make money as well. Another way that these companies may make money is to raise rates on margin accounts. So for those of you that are not familiar, a margin account is where a trader borrows against their existing holdings, and they do this in order to have more money to invest. So to make up for these zero commission trades, then these companies may raise those rates on those margin accounts. And then last but not least, mutual funds are charged additional fees by brokerage, and these fees are ongoing fees in order for these brokerages to offer these funds on their platforms. So if it's a zero fee platform, then 9 out of 10, these brokerages are charging these mutual funds higher fees. Now, over time, these fees can add up, and then these fees are charging you, the investor, tons of money, and then they're eating away at your profits or returns. So these are just some of the ways that they're thinking that these particular brokerage that just went into the zero fee commission trades are going to use in order to make up the revenue that they're losing on charging their customers anywhere from $4.95 to $6.95 per trade. And hey, it's the price that they have to pay in order to compete with companies like RobinHood, Webull, M1 Finance, and SoFi. All of these companies have been offering free trades for a long time now, and a lot of customers have gotten or become accustomed to using these apps like Robinhood and others in order to trade stocks and ETFs and index funds for absolutely free. And so it's just something to think about, guys. I mean, a lot of people, as I've been seeing and as I've been reading in comments, I don't think that a lot of people are going to change their brokerage firms because of this. I think that it does give investors an advantage because now they don't have to pay all of these fees in order to trade. But as this person that wrote this article says, for some people it can be a bad thing because they may trade more often than they did in the past. They may have less time in a position, and it may lower their returns that they may have received had they not been able to trade without paying a fee. So let me know in the comments, what do you think? Do you think the fact that these 4 large brokerages have went to 0 commissions online trades is a good thing or a bad thing? And are you changing your trading platform because of this announcement of 0 commissions online trades? Thank you guys, and if you haven't yet, please make sure that you like this video. Also subscribe to the channel, and also in the description I have many links where you can get free stocks. You can also get referral bonuses up to $50 added to any new account that you open with SoFi. And also I will leave my link in the description so that you can, if you're trading or interested in trading on RobinHood or Webull, you can use my referral link, and it helps out both you and myself get a free stock. Thank you so much. You guys have an amazing day.